Chapter 3 is on job costing. This chapter outlines the two basic costing systems, job costing and process costing. Job costing is used to one relatively small quantities of unique products are manufactured. Process costing is used when large quantities of homogeneous products are manufactured. So we have multiple objectives. First one, we're going to look at a job costing and a process costing. And then later on, we're going to look at comparing and contrasting job costing and process costing. And then we're going to explain the documents and a system used to trace direct materials and direct labor to specific jobs. And the next reviews how manufacturing overhead is allocated to each job using a predetermined overhead rate. It also explains how to determine the cost of a job. Job cost information is then used to make various business decisions. So this is kind of an outline, and we're going to talk more after this, and we're going to do some problems together, and we're going to look at how do we treat over or under allocated manufacturing overhead, and we're going to do some journal entries to see how we are going to make this all happen on the book. So let's get started. So process costing, it's something you can produce in a mass production, and always as homogeneous items, so either similar or identical. So total costs are averaged over all units because they're all the same. Homogeneous means basically the same. So some examples like paint manufacturers, you can allocate cost per can, per gallon, or per whatever unit. And oil refineries, so also they're the same. Oil is the same. So cereal manufacturers, so you always can allocate your cost to each unit package. These are all very mass production products. Job costing is on a unique custom products or small batches. And you may think about something like you get law firms, and you're treating each customer, you're billing each customer, and based on the times and a predetermined rate, say $100, $200, $300, or $1,000 or even more per hour onto on the customers. How do they determine this? They have many things to consider on the determination of the cost. So total costs are accumulated by job, but not by per unit, because each unit different. For example, someone has a bigger case, someone has a smaller case, so you cannot say on average how much each person will be charged. No, you cannot do that because everyone's different. So some examples: hospitals, you have patients. Some patients come in and just a few $100s. It's pretty expensive. But someone came in will be $10,000. My neighbor actually, our neighbor's wife, a few months ago was hospitalized and was treated and stayed in the hospital for 5 days. And so they paid $12,000 just for these 5 days. And they didn't get much treatment because the woman was not really in critical condition, but she was hospitalized. So this will be one. But I went to see the doctor to have my physical check, and it's going to cost me a lot less, even though I have the insurance pays for, and so the doctor is not going to get that much, spend that much time, and then it's not going to charge that much. So individually, we are very different. So as patients, we're also very different. So how much time has been cost, and basically money has been cost to pay for the treatment of the patient will very much different. Will be very much different. Custom home builders, okay, some custom homes maybe $1 million, and so some custom homes maybe a few $100,000. It depends. So then you can now say, oh, how much on average? You never can do that because every home is different. Advertising agencies, the business you get in the advertising industry, and it can be very different too. And then the time you spend on each product will be very different, and the people you hire for each product will also be different, so the cost will be different too. So those are very unique custom products. Sometimes maybe small batches, for example, advertising, and it can be in some small batches. It's possible, so it really depends. But for all these, we call that as job costing because we look at every individual one at a time. So here are some examples. Let's take a look. An automobile repair shop. Would that be job costing or process costing? Of course, each automobile is different. Some automobile may come in for just change oil. Some just come in for a very big things, for a collision and a very almost totaled or something. So it'll be very different. So that'll be a job costing. And chemical manufacturers, they make chemicals, and mostly they are in mass production, so it'll be indirect. So it'll be sorry, not indirect, a process costing. And a custom furniture builder, of course, is job costing. A movie production studio, what do you think? It should be job costing because they are making different movies, and the different movies will cost very, very differently. So it'll be job costing. A paint manufacturer is mass production, it's process costing. So it's just like that easy to distinguish all the jobs, whether it's job costing or process costing, based on whether you're treating each job individually or you're treating a mass amount of job, same job at the same time. So second one, understand the flow of production and how direct materials and direct labors are traced to jobs. Okay, let's take a look. So here are some basics on how, how the flow of inventory flows throughout the manufacturing system. So come from first one is the raw material. You get some raw material, for example, making furniture. You're getting some wood, treated or not, and then let's assume it's treated, and then you're going to use those treated wood. Maybe not. I'm not a very expert on this, but let's say the wood comes in and you're making furniture, a chair. So before you finish that, it's called a work in process. And when you finish that, it's called a finished goods. After painting, after all the treatment, it's ready for sale. So when you sell that, and you're going to account for something called a cost of goods sold. Okay, so finished goods are ready for sale. Basically, it's traditionally we call that as the in the retails they call it inventory. And here we have three inventories: raw material inventory, work in process inventory, and a finished goods inventory for the manufacturing system. Just remember that for the manufacturing systems, we have three different inventories. And here's an example. Production schedule for the month of December for this company, and they're making cross trainers, treadmills, and so on. So the jobs will have some kind of job numbers, and this will be considered as sort of process processing cost. So each job may have multiple quantity identical ones or similar. Obviously, it's identical because they're the same model. So, and here 603, the job will be made in a quantity of 50, and so start at on 2nd of December and scheduled to finish by 6th of December. And the same thing similarly, and we have 5 or 6 jobs, and there will be different items, different quantities, and starting at different time, and all in December. So there will be holidays. Those will be kind of a schedule, production schedule a company may make for the month. So let's take a look at the bill of materials. This is one of the document companies do for the manufacturing. So the job 603 is to make 50 units of the X4 cross trainer, and in here we need all these materials, parts, 1, 2, 3, 4, 5 parts. So heart rate monitor, LCD, entertainment screen, and so on. So total of 50, 50, 100, 100, and so on. So there'll be etc. here, and we may need more. Just in here we just put a 5. So those are the materials. Those are the direct materials we have. Purchasing process. Purchasing determines order needs. So we are going to need 50 of these, 50 of that, 100 of these, and 100 of that, and so on. So, and a purchase department issues purchase order, and a purchase order will be sent to the vendors. Then shipping and receiving prepares a receiving report after they receive the shipment, and then accounting department matches the invoice received from the vendor and a purchase order will be issued, and then they're going to there's one more here. They have to match number on the receiving report, so 3 documents, so they all have to match, and then accounting department is going to pay for the invoice. So this is a process of the purchasing, and we should have learned this in the financial accounting 2110. So here's another document. It's a job cost record 603. This is a job number 603, and for stock. And here's a 50 units of X4 cross trainer, and the date started 2nd. Date completed is not yet. So total 50 units. So how much is each one? We don't know. So to finish making all these, we don't know yet. So this is a starting point of the job cost record. And for the working process, and we have job 506, 561, 560, 561 throughout 563, and all these they have started but not finished, and we call that a working process. So how much do they cost? So total cost will be all together. We will put that into the assets part as a working process inventory. Remember, when we record inventory, we record based on the cost. So the total cost here will get into the assets as a working process inventory. So materials requisition, and so we're going to buy, because we are not making heart rate monitor and so on. So we're going to buy all these. So quantity is here, unit cost is here, and the total cost for the purchase will be $8,500. And a number here is a 7568. This is a material acquisition number. So here we're going to record all our raw materials. So we only look at December here. December the 1st, We have received all these, and on December 2nd, starting on this date, we have this job number 603, and then now we are going to have a requisition number 7568, units here, cost here, and so on. So the balance will be, we have a previous balance here, and then we have this balance. So okay, let's move on. So direct labor costs are traced to individual jobs. And we have 603, 603, 602. Those are the individual jobs. So we're going to look at 603 on the 2nd of December. We have spent 5 hours, and each one for this Hannah Smith, and her rate is $20 an hour. So she worked on job number 603 for 5 hours, and so $100 will be 20 times 5 is $100. So that would be a cost. That's a labor cost. It's a direct labor because she worked on this job, and she worked on the 3rd, and she worked 8 hours on that day, and so 8 times 20 will be 160. And before that, she worked on another job, 602, and 3 hours times $20 or $60, and so on. This goes on. So this is for one particular person. We are going to have whatever number of workers we have, we're going to all put them into records. So this is the record. A record is 324, and for the week of this 2nd of December to 9th of December. So for the 603 for work, and this is a job cost direct labor, and the materials posted to job cost records. So basically, let's see here. 324, remember that it's for Hannah, and she worked total 30 hours. So 100 hours, 160 hours, and etc. And it's in the front here. There'll be more on here, but we didn't put them in here. So total 30 hours for the month. So this is for the month. And we have these ones are just made up, and so this will be made up for our class, but in real life we do not make up. So 40 hours for another person, and 36 hours for the other person, etc. Total 500 direct labor hours are spent as a direct labor cost. So $10,000 will be put down here as a cost. So here we have a requisition number, and $8,500. Remember this, right? We had seen this, and these are the other ones. It's not shown. So total will be $40,000. So total units we have purchased, we have made, not purchased, we have made is a 50. So basically, we're going to have the total cost here, and we are going to have the total units here, but we're missing one line. It's a manufacturing overhead. So we're going to estimate on this one. So compute a predetermined manufacturing overhead rate and use it to allocate a manufacturing overhead to jobs. So predetermined manufacturing overhead rate is total estimated manufacturing overhead costs divided by total estimated amount of allocation base. So let's take a look. So predetermined, when we allocated manufacturing overhead to individual jobs, then we are going to use the predetermined manufacturing overhead rate times actual amount of allocation base used by the job, so we can find out how much cost has been allocated for each job. So let's take a look here. It's easy to see that from the example. Total estimated manufacturing overhead cost is $1 million, for example. It's just example, okay? We start over a new example here. But there's some information we have to use, we have calculated earlier. So this will be $1 million we have allocated. And the total estimated direct labor hours for the year is $62,500 500 direct hours. And for job 603, we have used 500 direct labor hours. Okay, and PMOHR stands for predetermined manufacturing overhead. So it's $1 million. It's estimated manufacturing overhead costs. Overhead can be many things, but it's not directly allocated as direct labor or direct manufacturing, direct materials, DM. So $1 million estimate overhead divided by direct labor hours, it would be 62,500. So it's also estimation because at the time we are in the beginning of December, so we don't know how many total hours. We do have a pretty good picture how many direct labor hours we will need. So it's a 62. Actually, it'll be $62,500. So hours. So you need to divide by this. Will be $16 per direct labor hours can be calculated. So easy math. So here we're going to allocate the manufacturing overhead to individual job. So again, PMOHR it's a predetermined manufacturing overhead, and allocated for the job 603 will be 16 times $500. That equals to $8,000. So $8,000 overhead will be allocated to job 603. So get back to this sheet. So $40,000 is for the requisition for the direct materials, and $10,000 will be the direct labor we have just mentioned. And then now we are going to have 500 hours for this job, and we have $16 per labor hour have been calculated. So $8,000 will be used as the estimated manufacturing overhead. So $8,000 put in here becomes $58,000, and we have 15 units. So per unit will be total cost divided by units, and it will be how many dollars per unit. So $1,160. That's the cost per unit. So we have done the job cost record and complete and calculation. So what time is manufacturing overhead allocated? Okay, here we go. So left side is the overhead. So we have a indirect materials, we have indirect labors, and we have factory overhead as because factory overhead comes from indirect material and indirect labor. So these are all being allocated into the work in process. So when work in process is finished, and it becomes finished goods, and the finished goods will be sold, and then we have a cost of goods sold. So this is basically everything has been allocated into work in at the time to the work in process. So floor cost. So we have a direct material, direct labor, manufacturing overhead. They all go into the work in process, and the work in process becomes the finished goods, and the finished goods will be sold, becomes cost of goods sold. Okay. So now we are going to determine the cost of a job and use it to make business decisions. So there are reasons why management needs to know the product cost. So there are six reasons. One is to reduce future job costs. So they're going to see, hey, this job costs too much, and let's do something so that we can cost less. And there might be multiple dimensions they can go with to reduce the job cost. Either they go with a lower acceptable quality, or they they shop for a cheaper materials at the same quality, or they improve their process to reduce the hours of work, and so on. Number two is to assess and compare profitability of the models. So when they know product costs, so they can build up different models to see which way can we make the most profit. So they need to know this product cost. That's very important. And pricing decisions. So if we're making each product at a cost of $1 and the market price is 5, so we want to compete. How much do we price ours? Do we price 5? Do I price at 4.30, or do I price at other price, or do we price as a 5 but we give them a deep discount or something like that? So there'll be a pricing decision will be made based, but you need to know how much does it really cost you to produce it. Number 4 is discounts. To determine discounts are high volume sales. So that's another one, discounts. So if we sell 1 at a price, if we sell 100 at another price, if we sell 1,000, it's another price. And how do we determine that? You need to really know how much it costs you. They cost you to produce. And number 5, based on custom orders. Those are for the unique ones. Those are for the job costing. And so you want to, customer comes in for individual job, and you're going to give customer a quote, and so customer may not be attractive to, if your price is attractive, and they may leave. So now you're basically bidding with our competitors to win the customers, and so that they can give the customer orders to you, and so you basically are going to see how much can we make for each individual custom order. You need to know how much it really costs you. You do not want to get a custom order and when you finish your fund, you're losing money on it. And number 6 is the financial statement preparation. And because you need to, in the financial preparation, you need to look at later with the last part of the chapter. We're going to look at some of them goes to the expenses, some of them goes to the cost of goods sold, and so on. So, but you need to know all the numbers by determining the product cost. All right, I just walk it out and I'm back in now. So here we'll continue. We're going to talk about the sustainability and the job costing. It's also on the decision making of the company, and so job cost record captures the most essential resources required to manufacture a product. So the job cost record can be enhanced with information about product and production's effect on the environment. So does it cause any waste? Does it release any poisonous or harmful air or anything, any pollutions and so on? And employees involved in manufacturing process. And what about the ethics? What about the morale of the employees? And so it will be all very good, very, very important. And future consumers. And for example, California has the law regulations says all the say pipes must be lead free, and toys must be lead free. And so before this, and the products has lead, and then in the future there'll be no lead. So are we going to have any impact on ourselves in the cost, and what will be the impact on the future consumers? And future disposal, and if we make something that is harmful to the environment, what about the disposal of that? Will be how about the recycling, or how about the collection of these harmful materials when they are used? So there will be some considerations by the manufacturers, some subcategories and extended the product responsibilities, and it will be also considered by the companies to look at what kind of sustainability issues these two may cause to the company. So here's an example. It's in a book. I'm not going to spend too much time on this because we have done one example in the previous slides. So I want you to read this in the book and to see how do we calculate the direct material cost, how do we calculate direct labor hours, and how do we determine the overhead based on direct labor hours, and how do we calculate the overhead to be allocated based on the direct labor hours to each of the two jobs we have here. So what about how do we calculate total cost of a job, and what will be the total cost for another job, and so on? How do we calculate those? So the reason I'm not going to do this here is because we have to go back and forth to do the calculation. Only thing, for example, $67,200 divided by 4,200 equals to $16 for the overhead. And how do we find it out? We always need to go back and find this information. So it's in here, $67,200, and it'll be 4,200 hours. You'll be used to divide to determine this overhead. So we have to go back and forth. It's kind of a little bit messy in doing that. So I'd rather to have you to read the chapter to find out all these numbers to see if you can understand. So for the job one, just briefly, $16 is the overhead we have calculated for each unit, and for each hour of labor, and then we have 180 hours for the job one, and the total will be $2,880, and the manufacturing overhead will be $2,880 for the job number 101, and number two, I think it's a 74. Yes, times 16. It'll be another number having calculated. Then we can do the total of this. So total cost will be one here. It's a direct labor. It's in here listed as 18,000, and direct labor cost 180 times $24. What's 24 here? Let's take a look here. $24. Here's a Boston pay, $24 per hour wage rate to employees who worked on these two jobs. So 24 will be used. 24 times 180, 24 times 74. So I need to go back to here to find out, okay, do you have a single math? So 24 times 180. So manufacturing overhead we have allocated with our calculations 2,880. So get a total for the job one. For job two, same idea, 74 times 24, and this is a given $12,000 is used as direct materials, and I have calculated 1,184 as the overhead allocated, and the total cost will be 14,960. And then in fact, if we want to do a total for these two jobs, will be 25,200 plus 14,960. So total will be $40,160. So something like that. So now we're looking at how to compute and dispose overhead and over allocated and under allocated manufacturing overheads. Just a little bit on this, because the overhead estimated, it's not always the same as what happens actually happened. So there are always some differences. If differences are higher by using the estimated minus the actual, so it'll be over allocated. If it's less than 0, and that will be under allocated. So here's an example. Fed Corp allocates manufacturing overhead based on direct labor hours. Total estimated manufacturing overhead for the year is projected to be $20,000. So it's been given. Total estimated direct labor cost is $140,000, whereas total estimated direct labor hours will be 10,000 hours. So what is the predetermined manufacturing overhead? So here's actually it's another example. So it'd be $200,000. So $200,000 here. It's projected. It's estimated. Divide by the estimated hours. $10,000. So it'd be $20 per direct labor hour. So Fed Corp's actual manufacturing overhead for the year is $190,000, and a total of 11,000 hours direct labor hours. So you see, this is 190,000. So in fact, we have 200,000. So there'd be a $10,000 difference, and this is 11,000 hours, but we have estimated 10,000 hours, so it'll be different. So we're going to use Fed Corp's predetermined manufacturing overhead rate of $20 per direct labor hour to determine how much overhead was allocated to all of the Fed Corp's job during the year. So total allocated hour number in the cost will be $20 is the estimated times actual $11,000. So total allocated is $220,000, and then now the number is 190. So it'll be $30,000 difference. So we have over allocated $30,000 in our case here. So how do we look at now we look at what to do if actual manufacturing overhead is not equal to the allocated manufacturing overhead. So here we find a difference, $30,000, and the target is 190, and the actual allocated is 220. So overhead over allocated is $30,000. So if we have under allocated or over allocated manufacturing overhead, so what do we do? So if it's under allocated, that we do not have enough allocated to job, and too little expenses will be recorded, and it's over allocated, then there will be too much expenses. So we want to take care of this on our book. So estimated manufacturing overhead costs were higher or lower than actual. Used more or less of the estimate allocation base than projected. So there will be two solutions. We can either adjust cost of goods sold in our on our book, or we can prorate among cost of goods sold, work in process inventory, and a finished goods inventory. So cost of goods sold is on the equity side. Work in process inventory is on the left side as the assets, and finished goods inventory is also on the assets. So we're going to adjust both on the equity side as well as the asset side. So how do manufacturers treat non-manufacturing costs? So those are the costs cannot be allocated into the product. So the GAAP says, general accepted accounting principle says, only inventorable product costs added to the cost of assets. So inventorable means something you can treat it as inventory, and so if it cannot be treated as inventory, we have to put those into the right side as expenses. Internal decision making. Management wants to know the total cost of product across the value chain. So they need to know how much it really costs us. It's not just the direct labors or direct materials, and we also want to put other costs into in here to see how much it really costs us to manufacture certain things. Okay. So here's an example. It's on the book. So requirement 1, predetermined manufacturing overhead rate is $620,000 divided by 77,500 hours, direct labor hours, and it will be $8 per machine hour. And requirement 2, allocate manufacturing overhead 54,000 machine hours times $8 per machine hour, so $432,000 will be allocated manufacturing overhead. Oh, what's number 3 here? Oh, this is not number 3. So the actual overhead is $490, but our allocated manufacturing overhead is only $432,000. So we have under-allocated manufacturing overhead of $58,000. So this is kind of a calculation. So we're going to look at how do we do the journal entries for manufacturing cost system, the job system. So purchase of raw materials. This is a financial accounting. So you're going to do the purchase, you're going to increase your raw material inventory. So when increase is assets, right? When increase is debit. We debit $90,000 in here, and we have not paid them yet. It's accounts payable. So increase the accounts payable is a credit. So debit $90,000 to asset account, and a credit of $90,000 to a liabilities account. It's got accounts payable. And now assume that Life Fitness used $112,000 of direct materials during December. So we are going to move all these raw material inventory into the work in process inventory. So work in process inventory increased by at the cost $112,000, and the raw material inventory is going to drop for $112,000. So it's assets. So when increase is debit, when decrease is credit. So we have a debit and a credit on both work in process and also the raw materials. So assume that Life Fitness used $90,000 of indirect raw materials during the December, and indirect raw materials we consider that's the overhead. So let's see, why is 2,000? Assume the Life should be $90,000, and both of them should be $90,000. Let's see. $90. Just double check with the book, and there's a typo here. So this is used $2,000 of indirect raw materials. So we cannot. This is wrong. So it should be 2,000. So we're going to have less raw material inventory, and then we're going to have this at 2,000. And this was this indirect use, and so it'll be manufacturing overhead. There may be many reasons. Some of the indirect, some the loss, or some damage, or some other things may happen. So we're going to have unexpected or as expected reduce in our raw material inventory. So I'm going to reduce for $2,000, and we're going to have a manufacturing overhead as $2,000. Okay. So the direct labor, we're going to see, okay, we're using $30,000 of direct labor. We have to consume that. And so working process inventory is going to increase at the cost of $30,000, and which payable will be $30,000. So this will be the direct labor, means, okay, this will be paid to as a wages to those people who are working on the production line. And individual indirect labors will be people who are not on the line, the supporting staff and so on. And so wage payable will be $13,000, and manufacturing overhead will be $13,000. So other manufacturing overhead will be, let's assume the company incurs other indirect manufacturing costs, such as plant utilities, $3,000, plant depreciation, $4,000, plant insurance, $1,000, and a plant property tax. Taxes are $2,000 during the period, so we'll put them together, it's $10,000. Now, in the $10,000 overhead will be debited. It's going to be because manufacturing overhead is a temporary account, will be closed at the end of the term. So this will be similar. It has the same manner as the cost or expenses. So when it increases, it's debit. So debit of $10,000 here. And accounts payable is increasing, is a credit. Depreciation is asset account, contra asset account. It increases the debit here. And a prepaid insurance, it's when it increases, it's also a $1,000, because it's you're using the insurance anyway. So so plant property tax is at $2,000. We add them here, and doesn't should be on this side. For some reason gets into here anyway. So $2,000, so $10,000 gets in here. Taxes the payable, the increases here. So assume 603 uses, as we did before, $500 direct labor hours, and the job 604 used 1,000 direct labor hours, and $16 as a rate. And so we're going to have 16 times 500, that's 16 times 1,000. In total will be $24,000. So working process, this will be direct cost, not direct cost. This will be the cost added to the working process inventory. So $24,000 as being added to the process inventory. So increase here. Manufacturing overhead will be taken here as $40,000. So this is kind of allocating our manufacturing overhead to a specific job. So to complete the job, for job number 604, direct material 72,000, direct labor 20,000, and manufacturing overhead 16,000, and the total will be $180,000 divided by $60 or so. Cost per unit is $18,000. And when we do this, and we're going to have finished goods will be increasing by 108, because we finished this one. So 108 total job to be finished goods in here, and a working process inventory will go down by the same amount by crediting that. So when you have the finished goods, you want to sell them. So the company sold 40 cross trainers from job 603, and all 60 from job 604 to the city of Westlake for its recreation centers. The sales price was $1,425 $1,425 for each cross trainer and $2,500 for each treadmill. So easy calculation, and 40 times, so 40 times the price and 60 times the price totals $207,000. So it'll be considered as, it'll be accounted for as sales revenue, as increasing its credit, and a receivable, we don't get a payment yet, so it's the same amount will be debited here. From job cost record, we know that each cross trainer produced in job 603 costs $1,160 to make, whereas each treadmill from job 604 costs $1,800 to make. So total cost of goods sold is 40 times the cost, 60 times the cost of the treadmill, and so $154,400 will be the cost of goods sold, and the finished goods inventory will drop for the same amount, so it's a credit here. So expenses, in the income statement, we need to calculate expenses. So salaries and commission expenses. So this for the sales, basically, and so sales force will be paid $20,000 for the period, and $3,300 for office rent. So it's not the plant. So office rent will be expensed, and marketing or advertisement will be $9,400, while we have the payable be paid and rent payable paid. Account payable will be increasing because we haven't paid the $9,400 of advertising yet, so total will be this amount, and I don't have the total here. So assume Life Fitness incurred $25,000 in manufacturing overhead and allocated $24,000 a job during the year. So we have $1,000 difference. So now the overhead must be closed. So close means make the manufacturing overhead as 0. So we're going to have $1,000 extra in the balance. We need to credit that, and the credit amount will be debited to the cost of goods sold. As we said, manufacturing overhead it's like a cost, but it's intermediate. It's a temporary one, so it must be close to 0 to the end of the period, and so the cost of goods sold will increase by $1,000. So now we'll put all together. We can find an income statement. Sales revenue $207,000. And if you want to go back and find out how we get to this number, it's in here, $207,000. And our cost of goods sold, $154,400, and it's also in here. We have calculated. And we have a gross profit. If it's this one minus this one, it's $52,600. Operating expenses, it's a total in here. So $32,700. $32,700. So easy calculation, you can find out. So basically, it's all down here. Okay. So that's basically the end of the chapter. The book has a much detailed explanation on each item, so I urge you to read the chapter and understand the chapter, and so that you can start working on your homework. All right, if you have any questions, please feel free to text me or email me. You have my cell phone number, you have my email number, so I'll try to get back to you as soon as possible. Thank you very much, and see you tomorrow when we start our chapter number 4.